Okay, we continue with the paper multiple choice, October 2020, paper 12. Okay, always remember before the exam, before you start to do question, read the instruction. Okay, let's see the first question. Okay, a trader prepare financial statement each year. What do this assist the trader to do? So what the financial statement can help us? We can see the profit from the income statement and can see the asset liability and capital, which is financial position. So here, calculate the amount owed to the credit supplier. So this one, you want to know how much owed, you can go to the trade payable aging. Calculate the cash drawing. This one you can calculate, see from your cash book, you can get it. Check the bank statement balance. This one you can get from the bank for the bank statement. Make decision about the future. So one of the main important of the report financial statement is to help the business to make a decision whether to expand, to discontinue or continue the business. So this is more overall suitable for this one. What is not example of the bookkeeping? Bookkeeping entry, basically the first part is the book of prime entry. Do the recording, book of prime entry. You have learned all the journal, sales journal, purchases journal, all the journal, cash flow, all this under book of prime entry. After that, you learn the ledger. So basically, these two are the detailed recording. So here, an entry made in the bank column of the cash book for a check received. This is under the cash book. Cost of goods purchased on credit enter in supplier account. This is under the purchases journal and purchases ledger. Expenses paid during the year enter in the income statement. Okay, income statement is considered financial statement. Okay, goods written by customer enter in the sales journal. This is under the book of prime entry here. So the answer should be C. This income statement, when we prepare the trial balance, this one done up to the trial balance. From the trial balance, transfer to the financial statement. This is done by the accountant. Okay, so not the bookkeeper. So the answer should be C. Okay. Question 3. The following balance appear in the Hussein book, feature, inventory, trade, all this one. They want to find the liability. This feature is a non-current asset, current asset, current asset, current liability, current asset, current liability, loan to Imran. If they didn't mention short-term or long-term, you assume it's a long-term, which is non-current liability. Bank overdraft is a current liability, but they just say liability, means that this one, this, and this. We have 4 items, which is 4,005 plus these 3. So we get, let's count, 4,005 plus 300 plus 1,000 plus 1,004. So the answer 7,200. So answer should be wait, let me see why the question. Let me count. Sorry, this one loan to Imran, not from. Okay, if the from, then only. So this one is not. Okay, only these 3 because this is 2. Loan to the Imran means this is a asset. So you give loan to, this is a current asset. So only these 3 items. So this is wrong. So 4,005 plus 300. So the answer should be 6,200. Okay, now let's move on. Okay, question 4. What does the owner equity consist? Equity for the account If a sole trader, we have capital. Okay, this is the equity section for the sole trader. If you have business company, you have share capital, general reserve, and the retained earning. So this is under capital, under company account. This is under sole trader account. So what does the owner equity consist? So accounting equation also asset minus liability. So amount of money in the business bank account. Okay, next. The amount owed by the business to the owner, the total of asset owned by the business, the total of the current asset less the current liability. So here, current asset minus current liability, this is working capital. Okay. The total of the asset owned, this is referred to the total asset. The amount owed by the business to the owner. So this one is a business to the owner. This is referred to this one. The amount of money in the business bank account. This is referred to the asset. So the most suitable is the B. Okay, question 5. Which entry did Sally make to record the following transaction? Rashid, a credit customer, return damaged good. So Shelly is a seller. So seller will record sales, trade receivable. If the goods return, it will record sales return. So since that this is a return damaged good, means sales return. So sales return, goods return, that means receive. So sales return, debit, receive. Who returned out the goods? Rashid. So the answer should be C. Okay, question 6. The following account appear in the book of Mary. Balance brought down 90, 150, return. Okay, so this is a trade receivable. On which statement is correct? On first April, Paul owed Mary 90. Okay. On 14, Paul sold. This one should be purchase from Mary. So this one is wrong. Number C, on 21st and May, Mary returned goods. So this is a sales return. So it's Paul return, not Mary return. Here, 30th is Paul owed Mary, not Mary owed. So the answer should be A. Okay, question 7. In which section of Zamir ledger would the following account be maintained? The sales account, the account of Hajib, a trade receivable. Sales ledger is referred to the sales account, sales account is under the general ledger. But Hajib is a trade receivable, it will be under the sales ledger. So the answer should be B. If a supplier purchases ledger. Okay, now let's continue. Okay. On 8, question 8, Sue allowed 2% cash discount to customer who settled their account within 28 days. Jane purchased goods, list price 200. On 10, she returned these goods on 15. Which entry was Sue made on the 15th? So she returned goods. First of all, cash discount to encourage fast payment. But this one, list price, they didn't, the discount in the IG syllabus, you have two. One is a cash discount, one is a trade discount. Cash discount to encourage the fast payment. Trade discount encourage the buy in bulk. But here they didn't mention trade discount. So this one, 200 purchase price on 10. She returned. That means this is the goods return. So Sue is the one doing the recording. So Sue is a seller. Seller will record this return as a sales return. Okay. So how much the return? You will record, assuming this is total, because they didn't mention how much, or they just say this good. This good means that the total amount. So the total amount is 200, the goods return. So she will record under the sales return journal. A trader was posted to the wrong account of the same class. Which type of the error was made? So commission is talking about the same class, wrong account. Original is talking about the recording in the journal already made mistake. Okay. The first step, recording already done, make the mistake. Principle is talking about the different class. Record into the different class, wrong class. Okay, but correct site and the correct amount. Complete reversal. Reversal is talking about debit become credit, credit become debit. That is called complete reversal. So here they say that wrong account, same class. The answer should be commission. Okay, question 10. Motor vehicle expenses 50 were incorrectly debited to the motor vehicle account. So which journal entry correct this error? So expenses incorrect. This is a non-current asset. This is an expenses account. So debited to here, we need to make the correction. So we have to reverse out the motor vehicle, debit and credit. So credit reverse out 50. Put back into the motor vehicle expenses account 50. So the answer should be this one, number A. So answer should be A. Okay, now next move on. Okay. Kat calculate her draft profit for the year at 28,400. She later discovered the following error. Rent prepaid by Kat was understated by 1,000. So here, the correct profit, so we do these adjustments first. The prepaid amount understated, that means we have to debit other receivable. Rent prepaid is an asset, so 1,000, and credit rent 1,000. So this amount, rent credit, this will expenses reduce, profit will increase. So our profit had to plus 1,000. Okay. The next one, closing inventory was understated. Closing inventory understated. Cost of sales overstated. Cost of sales overstated. Gross profit understated. Gross profit understated. Profit understated. So now when we adjust this one, we increase this one will increase, this one will increase. So this one we should plus another 1,500. So total should be 28 plus, so 30,900. The next one, a trader bank statement show a credit balance. So bank statement credit balance is a good thing. Okay. The following item has not been entered in the cash book. So what was the debit balance in the cash book before it was updated? Okay, let's see. So cash book, and then this is a bank statement. Bank statement. Bank interest received is in the credit side. Credit transfer is also in the credit side. And they added here, they got 2940. This is bank statement amount. But this 2 is not updated in the cash book. That means in the debit side do not appear yet. So in this case, assuming no other differences, by right, the amount should be lesser. Lesser by how much? Take the 2,940 minus 70 minus 280. So let's see, 249. So the answer 2590. So this is the amount. Okay, question 13. What is the purpose of the ledger, sales ledger control account? So here, to identify irrecoverable debt, to make fraud more difficult, to provide the total owed to the trade payable, should be trade receivable, not the trade payable. So this is wrong. To show the total cash and the credit. So no cash, only credit sales. So this is also wrong. To identify irrecoverable debt. So irrecoverable debt, where we get it from the information from the customer, they are unable to pay, not from the control account. It's just we take this from the general journal, move it to take the total for it to put into here. So the purpose is to control, so to make the fraud more difficult. Okay, question 14. Josh is preparing his purchase ledger control account. Which information will he obtain from his general journal? So purchases ledger control account, information obtained in the general journal. We open the ledger, purchases ledger control account. Balance what down here, purchases here, purchases written, and then bank, discount received, balance carried down. If you have contra will be in here. So contra entry with the sales ledger. So this one is for the A. Okay. Next is that goods returned to credit customer. This is the B. Irrecoverable debt return. This one would not. Refund received from the credit supplier. Okay. Refund received from the credit supplier. So when supplier make refund, it will be sitting in here. This is a more toward refund. So all this one, what is the information obtained from the general journal? So this one, you get it from the cash book. Okay, this one you get from the purchases journal. This one, these two, you get it from the cash book. Contra entry, you get from the general journal. So the answer, this one is purchases return journal. So your answer should be contra entry. A trader debited to the cost of repairing the office equipment. A trader debit the cost of repairing. This is a expenses. This is non-current asset. How this error affect the financial statement? So when this one recorded to this non-current asset, expenses understate, non-current asset overstated. Expenses understate, profit will be overstate. So profit for the year will be overstate. Whereas non-current asset increase will be overstate. So the answer should be A. Okay, question 16. Machinery at cost, provision for depreciation. Depreciation is 20% on cost. This is a straight line method. After the statement of financial prepare, it was found that the machinery repair cost 2,000 has been debited. That means this one extra 2,000. By right, 50,000. So if I take 20% times this one, I get 52,000 times 20%. I get 10400. But if I take this one times 20%, 50,000 times 20%, so I get 10,000. So extra 400. Okay, what is the correct balance on the provision for the food, provision for depreciation of the machinery? So if I'm going to adjust this one 400, this one extra 400, so I have to minus out 400 in order to get the correct amount. So the answer should be 22,600. Okay, so the differences is 400, sorry. Now let's move on. A machine which cost 32 as sold for the total depreciation. Okay, we open the T account for disposal. Cost is in here. Accumulated depreciation, which is provision for depreciation in here. Disposal value in here. So cost is 32,000. And then sold for 14,000. The total depreciation at the date of disposal is 15,000. So 15,000, which is that this one, 15,000 depreciation. So take this side is more or less 29,000. Here is more. So we have the loss 32 minus 29. So we have loss 3,000. So this is a loss. Okay. So the amount loss for 3,000. So answer is B. Now let's continue. We now maintain a provision for doubtful debt of 3% at the end of the, so beginning year provision for doubtful debt is 900. So we open the T account, provision for doubtful debt. Balance breakdown must be in the credit side for the provision, which is 900. And end of the year trade receivable, so we have to times 3%. So times 3%, we get the balance carry down. So 42800 times 3%. So we get 42800 times 3. So we get 1284 minus 900. So we get income statement amount here, which is 384. So credit provision for doubtful debt, 384, debit the income statement. Okay, so now next. Nima sell two products, G and H. The following information is available about his inventory at the end of the financial year. The quantity 1,800. So which one is lower? And here they say that it was found that 100 units of product G was damaged and were unsellable. So means that now this one totally zero price. So this one will become 900. So which one is lower? Valuation of inventory saying that choose the lower of cost and net realizable value. Which one is lower? Cost is lower. This one is lower. So you take the quantity times the lower price to get your total inventory. So 900 times 2, so you get 1,008. And then 800 times 1.2 is 960. So plus 1800, 2760. So this is the amount, we get 19. Okay, now let's move on. What is not a service? Service do not have the stock, do not have the inventory. Hairdressing salon, okay, which is provide salon service. This is more towards service. Accounting practice, basically providing accounting services. Supermarket, which is you go there to buy the stuff that you want to use, that goods coming in and sell. So that is more toward trading business. The financial year of Peter ended on 30th September. On 1st August 2020, Peter received rent 1,000. This covers the period from 1st July to 30th. So we put in the timeline. So the financial year end is 30th September. On 1st August, we received the money. This covers the period from the 1st July, okay, 1st July to 30th November, which is from here to here, July, August, September, October, November. Total is 5 months. Okay. Which entry will make the Peter statement? Statement of financial position is referred to this part. So here to here is a 2 months. Okay. So we need to calculate how to calculate. Take the 1,000 divided by 5 times 2. So it's 400. So this is called prepaid expenses. Prepaid expense, receive rent. Receive rent, this is an income account. Okay. Receive rent is an income. If a pay is a expenses. So this is an income. Income prepaid is a liability. Yeah. So this 400 will be the liability to Peter. So the answer should be C, because rent receive. Receive is an income. Okay, next, continue. In addition to a sales of the profit, a partner receives interest on capital. A salary, and is charged the interest on drawing. How are these recorded in the ledger of the partner? Interest on capital under the current account for the partnership. Debit side, you have drawing, interest on drawing, losses. Here you have the interest on capital, salary, and interest on loan, and then share of the profit. So this is the item that we have. So interest on capital is in the credit side. So credit side, credit side. Salary also in the credit side of current account. Interest on drawing is in the debit side. So debit side of the current account. So the answer should be C. Okay. Question 23. A sport club provides the following information: subscription, profit on the sales, depreciation, rent, insurance, wages. What was the total income for the year? So they are talking about total income, means this is an income, subscription, profit is an income. These three are the expenditure. So the total amount, these two plus together, 26800 plus 4200. So we get 31,000. So the answer should be donkey. Okay, now let's move on. A club was formed on 1st July 2019. During the year end, 30th June 2020, subscription received from the member total 2005. This includes 120 pay in advance for the next financial year. So this one for the next financial year, pay in advance. This is a liability. So we open a T account. Okay, let me cover up. Okay, this is a subscription account. They was formed in this period. So that means no balance brought down. During the year, subscription received from member. So this is a bank amount. Bank 2005. Out of this 2005, 120 pay in advance for the next financial year. Means that this is a balance carried down liability. 120. Subscription outstanding on 30th amount to. So this one is balance carried out end of the year. Asset. How much was recorded for the income statement amount? Income statement is in the debit side. Income and expenditure is in the debit side. So take credit minus the debit. So we get 2660. So the answer should be C. Okay, question 25. Anthony does not keep a full set of accounting record. He knows his opening and closing cash balance and wish to calculate his cash sales. Which item does Anthony not need to in order to calculate his cash sales? So here he has opening, closing cash balance, cash bank. So this one we need to know so that you know what is the amount to be. Next is that cash discount. What is a cash discount? Cash discount is to give the customer to encourage prompt payment. Okay. So this is to encourage prompt payment. Next is that cash drawing. This is to reduce the cash expenses. So which item considered not part of the calculation? Cash discount. Cash discount, when you receive, you will debit cash and then debit discount allowed and credit customer name. Okay, question 26. A trader has not maintained a full set of accounting. How can she calculate the credit sales for the? So if we use the trade receivable, because credit sales, so trade receivable, we have balance put down here, sales is here, credit sales return, bank, discount allowed, okay, irrecoverable debt, and then balance carried down here. So here they say receipt from credit customer plus the closing. So that means this amount plus this amount minus discount allowed. That means this is wrong already. So A is wrong. But now here they say this receipt from the credit customer minus closing trade receivable. So this is also wrong. Should be plus. Now receipt from credit customer minus trade receivable. These two are wrong. So receipt from credit customer plus and minus the opening. So the answer should be donkey. Let's move on. Question 27. A trader make the following forecast for the business for the next financial year. Average inventory, rate of inventory turnover 6 times, markup 25%. So markup is the gross profit over cost of sales. So what was the forecast sales for the next financial year? So we have average, we have the rate of, so we use the rate of inventory turnover, so which is the cost of sales over the average inventory. So here we have cost of sales over average inventory is 80,000 equal to 6. So our cost will be 6 times 80,000. We get 480,000. And then they say markup is 25%. So sales minus cost of sales, gross profit. So here 25%, here will be 100%, here 125%. And we get this one is 480,000. So we want to find the sales. So we find the 480,000 divide by 100%, get 1%, get 1%, get 1%, and then times 125. So we will get the answer. So 480 divided by 100 times 125. So we get 600,000. So the answer should be donkey. Okay. Now next. A company provides the following information about the current ratio. What will explain the change in the ratio? So here, getting better, getting better. So what could be the reason for it? So current asset to current liability. This one must be increased, this one must be decreased. Inventory decreased, wrong. Other payable increase, wrong. Other receivable increase, possible. Trade receivable decrease, wrong. So the answer should be C. Okay, now next move on. 29. A trader want to improve his gross profit. How can this be done? So gross profit, gross margin. Gross margin is that gross profit over revenue or sales. Okay, so to improve it, this one must go up. This sales go up because of the gross profit here. Sales go up, but because the component, this one is a sales minus cost of sales. So this one go up, this one come down. Okay, then it will improve the gross profit. So now reduce administration. Administration is under expenses. They want gross profit, so nothing to do with it. Reduce depreciation, same thing. This is expenses, also won't change. Reduce the rate of this cash discount allowed. Cash discount allowed is expenses also. It will not affect the gross margin. But trade discount reduce, then the selling price will increase. Selling price increase, sales will increase. So gross profit margin, profit will increase. So the answer should be donkey. Okay, now 30. Mesa provide the following information for her first year of trading: sales, cost, gross profit. In her second year of trading, Mesa reduced the selling price and sold 1,005 units. Her gross profit decreased by 200. There was no change in the cost per unit. What was the total value of the sales in the second year of trading? Okay. Reduce selling price. So selling price reduce and then sold at the quantity 1,005. Her gross profit decreased by 250. This is gross profit reduced by 250, means that become 5250. Okay. $5,250. Okay. Now next is that we have this one decrease. There was no change in the cost per unit. So no change on the cost per unit will be 1,005 times $4.50. 1,500 times $4.50. We get 6,750. Okay. What was the total sales value? So total sales value will be in here. So we take this plus. So we get plus 5250. So the answer should be 12,000. So the answer should be C. Okay. Now next is 31. AB Limited and CD Limited both started business on 1st Jan with the ordinary share of 100,000. Neither company has any debt, debenture or loan. Both companies have the same profit. Only AB Limited pay a dividend. the return on capital employed was calculated using the closing capital employed. So ROCE is the profit over the capital plus non-current liability. So what we got to see is that since that both with the same 100,000, there's no loan and debenture, that means no liability. But when this company, only AB pay dividend. When pay dividend, the end year capital lesser. Okay, this one should be higher. So which statement about AB Limited ROC is correct when compared? So when this one is lower, okay, so this ROCE should be higher. Okay, so this one lower, this profit should be higher. So it is higher because dividend reduce the retained earning. So yes, because dividend, you will charge into the retained earning account under the in the debit side. So this one should be correct. It is lower because the dividend reduce capital employed. So capital employed is this component, capital plus, okay, for company, we use equity, the term equity plus non-current liability. And the equity part of it is a retained earning, okay? And this share capital and general reserve. Okay, next is that is lower because the dividend reduced the profit for the year. Profit for the year will not reduce because dividend is charged into the retained earning. Okay, it is same as the, no, this is not won't be same because CD didn't pay out anything. So which one that's possible? The answer B. The answer is A, because dividend charged into the retained earning. This is more direct to this one. Okay. Now next, move on to question 32. Which interested party use the financial statement of a business to assess current performance or plan for future activity? So current performance, bank, basically they just want to ensure you can pay back the loan or the amount owing. Employee only concerned about the share, the salary, the bonus, so they don't start their business for the planning. This is more toward planning future activity. Government is more toward collecting the tax to analyze the economy. Okay, whereas manager is the one that will take care and do the planning for the future activity. So the answer should be donkey. The special skill of the employee are not recognized in the financial statement of a business. Which accounting principle is being applied? Historic cost, talking about the original cost to be recorded. Materiality, talking about the amount significant or not significant to recognize as a non-current asset. Money measurement is ensure that all the monetary term recorded in the book, not based on the your own judgment to record. Realization is talking when to recognize the sales, where to recognize the inventory. So the special skill not recorded because of that this is not the monetary term. Okay, question 34. How can a business comply with accounting principle of prudence? Prudence, there are two parts. One, as profit, asset. This one, not to overstated. For the losses, not to understated. So here, asset, avoid understating. Losses, avoid understating. So the answer should be B. Last question. What is not an aim of the International Accounting Standard? To ensure accounting standard in different country agree, not the aim. To establish an organization to set a standard in every country. This is not their job, okay? This is not the IAS or the accounting board job. This is the individual organization. To make sure it easier to compare, for comparison purpose, it will help to reduce the variety of the accounting practice worldwide. This to reduce the differences. So this is one of the aim. So the answer should be B. Okay. So that's all for this paper.